What's up, guys? How we doing tonight? Had to cut this song short. That end just lasts for like 2 minutes. Anytime you guys have a good day, you gotta listen to it. It was a good day by Ice Cube. I believe it is. Yes, Ice Cube. So definitely worth a listen. Puts the vibe up. Puts the vibe up. Let me just refresh my chart. I see that the power of 3 indicator is tripping. So there we go. Very, very good stuff today. Let me just confirm you guys can hear me and see me all right. Well, see me. See my charts all right. Just give me a little message in chat to confirm that. Awesome. Well, as I said, a very good day, very nice. We just had straight expansion higher. Now, a lot of that expansion happened pre-New York Open. So for myself, who only concentrates on trading New York, it wasn't much of a piece to get, but we finally got our move to the upside, right? We talked about it yesterday. I said I want to see upside. I don't anticipate upside because we can have a lot of things happen. There were a lot of possibilities, but it's very nice when you want something to happen and it works out beautifully, right? Use the weekly open, flip weekly open, invalidated the short-term SMT. Of course, there is still a lot of SMT to the upside with NASDAQ being a little slow to the pedal, right? Which hopefully we can catch tomorrow, or if not, we will completely get the fuck out. So this type of SMT, this type of divergence happens on big reversals. So it's either we're gonna just slowly go up and then reverse lower, or we need NASDAQ to explode higher, catch up, and invalidate this SMT quickly. And by quickly, I don't mean tomorrow. I mean in the next 1 or 2 weeks. So that will be some uncertain times for myself, but we'll have to see then. For today, very simple. Where did we open the day? Daily bullish fair value gap. What does that mean? I'm bullish. That's simple. So with this delivery higher, what were our objectives? Well, as we talked about in our weekly outlook, we had the buy side liquidity, which aligned with these relative equal highs once we go down on a lower time frame. But also at this point, this is a swing high, even though it's a little easy to miss. So I'll just call these equal highs. And we also had at the end of it previous month's high, which was the true draw. And from this point on, you have a bunch of short-term objectives to take profit, which we'll go look at in a second. One thing we don't get the chance to talk about very often, pretty much, is the 4-hour chart. I always say when the daily's clear, why the fuck would you go down to a 4-hour? You don't need it, right? I utilize time frames very mechanically. Just give me a second. I just saw that my sound for the recording was extremely loud, and I want the YouTube people to be able to understand me correctly. Awesome. As I stated, right? Never need to go to the 4-hour chart unless the daily is unclear. And before this candle printed, the daily was not unclear. You had your direction, but you didn't have a lot of insights between that range, right? Between that extreme and that fair value gap that we were stuck in, as we talked about yesterday, you didn't have a lot of insight. So if we go down to the 4-hour, this is where we can gain some more insight, because instead of just being daily consolidations, we actually have 6 candles, right? 24 hours, 6 4-hour candles. Might be 5 actually with the close. So let's just see 1, 2, 3, 4, 5, 6. Exactly. All right, so 6 candles. What do we see here? Well, very straightforward. Yesterday, with FOMC, rated liquidity. So this is how you can come with a daily idea. And yes, you can say it took out previous day low. Sure. But when you're trying to find your higher time frame bias, your higher time frame objective, and the order flow, you might want to look at that. We took out both sides of the range, right? On both ES and NASDAQ. That is nothing different from this point. We took out both sides of the range with FOMC. So now you've just taken out buy side and sell side. Where we go next will not be a manipulation, because you've already taken out everybody that was short and you've taken out everybody that was long. So from this point on, you can go wherever you need to go. So I anticipate that today was distribution, right? Specifically distribution higher, as I said yesterday. And as you can see from this reaction, not closing below and then trading back up into this wick, those were the first objectives. If we look at the 4-hour candles, you'll notice right here that at 10 a.m., right? So this is pre-New York Open, but at 10 a.m., we already were extremely high up. We expanded very aggressively. And after all of this overnight run, which was, wait, you know what? Let's check actually what it was. So from Asia to the high of day, that was 566 points. That is a big range. And after that move, which was formed during the 10 a.m. 4-hour candle, we started to have a retracement in the afternoon. So definitely a lot of opportunity between these two candles. And again, I'm talking specifically New York with a 200 handle range. So if we go down to the 15-minute, this is where we'll be able to get some clear ideas, because as we saw, lower, we already had our rates. So if we're going up, I anticipate that we're going to continue going up for the day, trending day. And you can frame some retracement opportunities, but this is not the main thing that I am interested in per se. Sorry, my phone is vibrating. Let me just mute that very quickly. Awesome. What do we have? Well, we had 8:30 news, more specifically unemployment claims, right? So let me just mark this out. High impact news. Whenever I do these PA reviews, I know some of you are more experienced and are coming here sort of as a way to gauge your own things, listen to different ideas, and see how other people view the markets. Sure. But for those that are coming here from a beginning standpoint and as beginners, make sure to concentrate not on what I say, but the order in which I look at things. So very specifically, okay, I went on my higher time frame, I built an idea. Now I'll go down to the 15-minute because that's my intraday time frame, and I profile based on the current events. More specifically right now, there is news, and then I'm going to look for manipulation and then a reversal to head into distribution. So in this very specific case, what do I have? News, no clear Judah swing. Right? If I'm on the 1-minute chart, I could say, oh, it went up before and then it's going down. Sure. Which is why I'm on a 15-minute intraday chart. I want to see a clear move in the opposite direction. Now, I had no clear move to the downside. Now, you can frame this as a move to the downside, more specifically because there was SMT at this point. So we're going to point it out. This was my loss from this morning. We're going to view it on a 1-minute chart as well. So we have our news. And the move with that news formed SMT, right? So right at the news, there was SMT, and there is still SMT once we reach that 9 a.m. So SMT is present, even though it is before our trading window, right? Because we wait till 9:30. But if you look at 9:30, and actually I want us to visualize it like this because I talked about it yesterday, there is SMT in between candles and not swing points. Right? So we're comparing the very two same candles. But when I go down my time frames, that is lower time frame SMT. So whenever you see candle divergence, I guess you could call it, you got to understand that in the lower time frames, these are swing points and they form SMT. So this was in relation to my first loss this morning, 9:30 a.m. open, Judah swing lower in a 1-minute time frame. Then expansion higher, SMT is present. That was my confirmation. We have a beautiful bullish breaker at this point, overlapping PD array, keeping it very, very simple. That was my first trade, and that was my first loss. I entered right here and got instantly taken out of the position pretty much, had my stop at this level. My position lasted 3 minutes. And you know what? That's part of the game. I can't be mad at it because that's just how these things go. You can't always win. And I am very happy with that setup. To me, it was a perfect setup. We had a nice open low. We just had to go and run it a little deeper, lower, go take out more liquidity, more specifically. So we went lower and then had another nice opportunity. We're quickly going to go back to the 15-minute and see that at this point on, you now had some higher time frame SMT. So I'm referring to the 15-minute specifically, right? But I'm looking at these candles specifically. See, lower time frame. But if we look at, what was I looking at? Yes, if we look at this candle specifically, but we had a swing point right here. That's why I was confused. It's two candles next to it. But there is no SMT at this point, actually, never mind. So swing point on NASDAQ, not a swing point on ES. Doesn't matter to me specifically, but if I'd want, I could just go down to the 5-minute, find you guys some swing points at this level. The important part is not where the SMT is, right? Swing points here, swing points here. It's that there is SMT present. Because at reversals, we will have cracks in correlation. We will have divergence. Those are one of the most important concepts in my trading is there has to be SMT present. And if we look at the result, I will just remove all these lines. Remember that there is SMT at this level and we are bullish. We have higher objectives. Now, the only thing missing is, well, of course, you got your loss there. If you found it, that was a loss for me personally. But that doesn't invalidate my idea. Losing a trade has no meaning in regards to my understanding. My idea was still valid. We just had to go take out more liquidity. Sure, I can allow it. And then I wait for time and price to align, which will be when? 10 a.m. open. I am currently within the 950 to 1010 macro, which I understand that price movements and anything that happens within this time window is of a higher importance. I actually didn't draw the box here. So let's do it. 950 to 1010 right here and macro, or 950 to 1010 macro. What do we see? Right at the open of the macro, we form a fair value gap, a bearish fair value gap, which we then, right before 10 a.m. open, invalidate this inverse fair value gap, which is your first sign that you are now ready to go to the upside. People like to call them changes in state of delivery, whether creation of order blocks or the invalidation of offside arrays. So to me, that is my first sign that I can be looking for longs. But I don't trade inverse fair value gap. I trade unicorns. Now, I could tell you the non-pessimistic approach, which is that within this leg, pretty much within this PA, there is a lower time frame breaker. I've backtested them so much that I don't have to look at a lower time frame chart to know. And here, I'll go show you guys. I like to tap into the 15 and 30 seconds whenever I see this. And if we look at the lower time frames, you'll see this very nice price range. Low, high, lower, low, taking out the low of the range, and then trading back above is right here. You have an inverse fair value gap at this level, so my entry would be here. But as I always tell beginners, that's not the pessimistic approach. So let's look at the pessimistic approach, not the insane risk to reward, beautiful trade. Who cares? That's not something that anyone can reproduce at all times. What can be reproduced? Well, it's very simple. We're looking for a breaker block. Now I have a breaker block on ES, which I understand is currently, based on the higher time frame, the stronger asset. I personally don't trade ES at all, but if you were going to prioritize, you'd be looking for longs on ES. But what I can do is utilize an entry on ES and just take it on NASDAQ. That doesn't change anything to me because I only want to be trading when these two assets are correlated. Right? They are following each other. They are doing the same things. If not, it's against my rules to even be trading, which means that I can take a trade at the same time, using one as the entry. And what do we have here? Breaker block, PD array. I was going to say overlapping. This one is not overlapping. It is in close proximity. And if we look at the retracement into this fair value gap, which is not just a volume imbalance, kind of hard to see, right here, this would be the entry. So it's actually worse in terms of being pessimistic. If you did not spot this though, you could have just waited for the breaker, right? And you might not see a breaker currently, but SMT's form breaker. And if you see right here at 1010, right at the end of the macro, we formed SMT between NASDAQ and ES, right? I do want to point out that all I'm looking at is very, very simple stuff, all right? I'm looking at fair value gaps, breaker blocks, divergence based on time, right? And there are a lot of moving parts to that. There are a lot of steps to follow, but it is not complicated. All it takes is practice. So if I lose you along the way, just remember that specific thing. Now SMT, which means that from this high to this low, if we trade back above this high, is SMT, since ES has broken it, right? ES swept this low, and once ES trades back above this high, it forms a breaker on, it forms a breaker on ES, but I can use the SMT and say that this swing low has been broken due to the SMT. And this, what I would call a failed order block, right, or mitigation block if you utilize them, is actually a breaker block due to the SMT. And that allows me to be able to take a position on this inverse fair value gap, which is an overlapping PD array to my breaker block. Now, just looking at my charts, I chose a lot of rainbow colors today. I'm sorry, guys. But if we forget all about this and just keep the basic idea, I am within macro. My bias is higher. We just invalidating this array, which is my go. It is my stop loss, basically the light turning green is what I can say. I can now start looking for longs. Looking for the first breaker. Well, I don't use lower time frame breakers. Let's wait for the first 1 minute breaker. Well, first of all, even if you did not look at ES at all, you have one right here, right? So you don't even have to push further. And you also notice that here we swept the lows and took out the highs. So no matter which breaker you utilized, it all comes down to the same thing, which was your overlapping inversion fair value gap, because it did not retrace into any of these fair value gaps that it left open. If it did, like if right here we retraced lower, that would have been my entry, right? From the point that we formed this breaker, trading above this candle's high, I'm looking for longs. So I'm waiting for any retracement into a PD array in close proximity to that breaker block. That was my last chance, right? Well, actually, it formed a fair value gap that it traded back into. But if it did not retrace into this, I just missed the trade. That's part of the game. My entry model has very specific criterias because it is all based on data, probabilities. I know that if I trade every single move that I can predict with this specific entry models, this should be my result. Once I start getting other entry models in, sometimes it's going to be better, sometimes it's going to be worse, and my consistency will take a hit. Now, I'm telling you to take my word for it, but once my app is public, people who have it will be able to see through the data. If we look at the stop loss very quickly, inversion fair value gap is my first PD array. I have, well, technically that fair value gap does not yet exist, so I can't use it. So right here I have inversion fair value gap, fair value gap. I'm going to utilize this candle to give me quite a decent R, not to this high, but if we utilize our standard deviations of our breaker block to find a high probability objective, you'll see that 4 standard deviations was hit just before starting a retracement, but that is not a conservative approach. I would look for the 2 to 2.5 and look for an intermediate time frame level to align with it. So here I would head to the 15-minute, but the thing is, price action from this far ago, well, from this long ago, is pretty much, I just have to scroll left a lot. So this is where I tend to just go to the 1 hour chart, my intra-week time frame, and look just because it's easier to see. Of course, there are all these equal highs, which we have already hit before New York Open. What is the next pool of liquidity? Well, I have clear buy side liquidity here and also a very nice wick into a fair value gap to target here. So these are all great objectives, right? For long-term objectives, at least. Now that first objective was aligned with my short-term high, so that's not going to be a target for me. True target would be the liquidity here. And of course, you could keep a runner up to 4 and you could keep a runner up to very long after that. But if you took that entry, you would have gotten stopped out break even after having taken profits. So definitely not the biggest trade, right? As I always say, the biggest day does not equate to biggest results. All right. I actually don't say that publicly too much, but I do say that to my English students. But that's due to the large overnight moves. So I guess if I wanted to have the best trade possible today, I would have had to be trading during Asia or at least early, well, mid-London. But that's not my goal. My goal is not to have the biggest trades. It's very easy. My goal is to make money consistently. And this low 2.47R is a lot of money, right? Money is infinitely scalable. You guys have to keep that picture in mind. And yeah, we can look at the rest of the day, more specifically the lunch trade, which led to a short opportunity, but I'm not going to speak on any long continuations, because to me, I had my understanding at the open, and then once we retrace this steep, and yes, there's a 15-minute fair value gap, there is a continuation model, but if you're in here, you're done for the day. So I want to try and set a nice example, and so we won't look at any of the other long opportunities. But once you're in the PM session, your Thursday, what does Thursday often do? Well, in classic weeks and in trending days also, when we are Thursday, the PM session oftentimes just retraces into the AM session levels, right? That is, by the way, all understood through statistics. So once again, the app will be there. Now, we took out some higher time frame liquidity. As we saw in the daily chart at the beginning of this review, we have a lot of bearish SMT at the highs, so taking a short is heavily justified. Now all I need is a confirmation of intraday. And what do I have? Well, I have a lunch rate, and we haven't talked about a lunch rate in a while. I haven't seen one in a while myself, but I don't often look for them. But you use the noon to 1:30 range, and you look for the highest high and the lowest low. Very straightforward stuff. Highest high and lowest low is actually the first candle here, and lowest low. You have your lunch high and your lunch low. You're looking for the rate of one to go target the other. Now, if you're just entering on random stuff, well, maybe you got stopped out here. But our rules are very simple. You have your rate. From that point on, my objective is, well, our lunch lows. Waiting for a breaker. Waiting for a breaker to form. A bearish breaker, more specifically, because I'm looking to short. Bearish breaker, bearish breaker, bearish breaker. Sorry, I just don't want to get confused. There is SMT at some point, if I'm not mistaken. Here, we took the highs, we took the highs. This is equal, so it mitigated it. And right here, is that SMT? Yes. All right, sorry guys. I was not trading this PM session, so I'm looking at it at the same time as you guys are. If we look right here, what do we have? Divergence. Awesome. So once we trade below this low, this is a breaker block. Now you don't need to use that one and to look at divergence. That is the complicated approach. Truth is, you had a breaker form at the same time right here. The same candle formed both breakers. So no matter which one you were using, it does not matter. But I'm always going to use the most recent one because that's the easiest understanding to trade this strategy. Is how do you choose which breaker? Just the most recent one. Doesn't matter. If you're right anyways, they will all line up. And then closest entry. I don't choose. Sometimes I look left. This might look like me choosing in hindsight. But no, I'm just taking the first one that it retraces into. So what kind of bearish array do I see at this point? I need a fair value gap or an inversion fair value gap. Well, we have not formed any fair value gaps left yet. I have an inversion fair value gap, just inverted it. As soon as we trade back into it, that's my entry. I don't wait to see if it retraces deeper. My stop loss allows for that. So for example, I have fair value gap right here. I have an order block at this level and no other fair value gap, but I have SMT. So basically my stop would have to allow for us to sweep this high, but since there is SMT, this high has already been swept. So I'm gonna drop it down to this high, and in this specific instance, I only have two PD arrays for the stop loss. I have the order block and my entry PD array. Oh well, actually, I just saw. Technically, there is also this one, which we did trade through on my entry candle, but I did not know that at this point. So there's a lot of defense, as I like to say. Very tight stop for NASDAQ too, 14.5 handles. Now, my objective is lunch lows, but am I gonna hold this position all the way till I'm up 6.5 R and allow that position to return to break even without taking money out? Fuck no. So what is the mechanical approach to that? Well, premium and discount all the way to my objective, specifically when I'm trading these intraday draws on liquidity. So one trading setup for life by ICT. I like to draw my premium and discount all the way to my objective at all times, right? Even when I have London frameworks, I like to do that as well. I want to know my current range that we're going to be referring to, and this is it. And yes, there's my current daily range, but I don't anticipate that my afternoon will retrace all the way down to a discount as it actually did, right? If we look at the entirety of the daily range, it went further than anticipated. But my objective was this, and if I had a runner, I would have left it gone longer towards other objectives. But as I told you guys, I cannot trade that, so I can't speak on it. 5-minute chart, I have my range. First discount and efficiency. In this case, it is liquidity. This swing low specifically. Why this one? Because it's the first one in discount. That simple, that brain dead. I don't need more. So that is my partial objective on the way to lunch lows. That allowed for, if we can look at it, that allowed for 2.81R. Half my position off there. Then hold all the way up until lunch lows unless there is SMT. So if I look at ES, I'm just trying to find the exact lunch lows. So that would be right here. So if there is SMT, meaning that either asset takes, well, basically the other asset I'm not trading, so ES takes out lunch lows, but NASDAQ doesn't, then I can treat NASDAQ as if it has, and that's a take profit for me. But looking at it, you can see we actually formed SMT at this level, but the other way around. So you had your partial, and then you could have held all the way your other half of your position for a nice, probably close to 5R realized. That is a very nice trade. I am sad I missed it today, but I very rarely trade the PM session. I have a lot of projects to work on, so I try to have that time. We talked a lot today. We don't usually look at the PM session because we usually always have, well, shit opportunities recently in the afternoon session. And I'm not speaking about power hour specifically. A lot of people like to scalp. I'm an intraday trader. I'm not a scalper. So I like to trade the big moves, and you rarely get big moves. Well, actually, these past few weeks, you haven't got too much big moves in the PM session. Do you guys have any questions about either setup we just looked at? I traded the first one, and as I told you guys, had a loss at the open. Beautiful setup, just didn't work out, but I had a re-entry opportunity right after. Not seeing any of you guys type, so I'm guessing it was all clear tonight. All right. Well, on that note, if you're trading tomorrow, I wish you luck, and I'll wish you all also a good night. We'll have this recording up on YouTube shortly. See you guys Sunday, actually, for the PA review, for the weekly outlook. Have a great night, guys.